Let's welcome in the next guest on the show. The management at Shriram Property is now with us, Mr. M. Murali. So overall, the numbers are strong, but the margins have been hit. How much of an input cost did have an impact in this quarter?
Input cost has been one concern 3 months ago. I don't see a concern now. As you see that Government of India has taken a lot of good action and things are in control now. Steel prices have come down a little bit and cement price also I expect to reasonably come down. So this year input cost is a matter to be watched and we need to figure out how to deal with that. But earlier we were worrying about it to go up to 10%. Now I would say it will come down to about 5%. On the other hand, price increase has been extremely supportive for us. Last year, from Shriram Properties side, we increased the project cost by at least about 10%. So this year, the price increase is expected to continue further. It is happening not because of the input cost alone, it is happening because of the market consolidation, particularly post-RERA. Now, last year, there has been a tremendous amount of consolidation. Only large branded players have been able to execute well and sell well. And the customers, there is a special preference for large branded players. Hence, there is a price increase become inevitable. And also on the other hand, mid-market and affordable housing supply side, there has been a big, slowdown on supply side. On the demand, there has been a good increase on demand. Supply is restricted only with a few players. Hence, we see a price increase becoming inevitable. This year also, we expect the price to go up at least by 8 to 10%.
Okay, so prices to go up by 8 to 10%, that's the word coming in. But Mr. Murali, if so far you have been a lot more concentrated on Southern India, which has been your key market, as we are seeing a lot of real estate players are now expanding into other geographies as well. Is that something which is your plan and strategy as well?
We are not looking at expanding into other markets at this point of time. We'll continue to focus on South India. Having said that, we have entered into Hyderabad now. We'll be launching the project next month. So Hyderabad is one new entry. We have been present in Bengaluru, Chennai, Kolkata, Visakhapatnam, and Coimbatore. Hyderabad is a new entry we are making this year. Other markets we are not looking at currently. This market itself provides huge opportunity. We are looking at growing 25% CAGR for the next 3 years, which looks very comfortable from the markets where we operate. As you have seen, last year was a turnaround year. We have got a good profit reported, and FY23 we expect the growth to continue further in a much more comfortable way. So we would like to focus on consolidate our position, get into 5-6 million square foot delivery, and getting into 150 crore profits, and become cash surplus, debt free in the next 2 years. So our focus has been complete consolidation, and in the current markets provides that kind of opportunity for us to look at much bigger growth.
Okay, so that's very optimistic commentary coming in, Mr. Murali, talking about 25% CAGR for the coming years as well. But you already talked about the Hyderabad project, which is upcoming. But apart from that, which are the other projects in the pipeline? What kind of pre-sales momentum, etc., that you are seeing? And what could be the revenue potential from these?
This year, we have lined up close to about 11 new projects and 6 new phases from the old projects. We are looking at launching 17 projects this year. Compared to 12 last year, this year we are looking at 17 new projects to be launched. So that's a big number. And major important things, see, last 3 years we done a sales of over 10 million square feet. About 70% of the sales which has been done, which is coming for revenue recognition this year and next year. 60% of our development management fee income from the projects which has been sold the last 3 years' time, coming for revenue recognition next 2 years. So we expect to have a very strong balance sheet, very strong growth on cash flows, very strong growth on profitability based on the projects which have been sold in the last 3 years' time. So that is a very positive one. And the new launches will further help and anchor our growth in achieving the sales momentum what we are going through now.
Got it, sir. Thank you so much, sir, for taking out time for us. Good to get perspective. On that note, we're taking a break, coming back quickly, leaving you with Nifty down 25 points, small cap index up 1.2%.